Welcome back to part 2 on fixed range volume profiles. I had to stop the first video because I was coughing and I needed some water. And as I was saying, price action is fractal. So when you zoom in, this area here may look like a big range on the 5 minute or something like that. But you'll have the bigger range up and down here. You know, like on the 4 hour or even daily or something. So once you understand, you know, how price can trend and then range and trend, then you'll start to see this and where it's appropriate to use it. Because let's say you were in a trade already. So let's say you were in a long here and then it started ranging here. And I'll get down to another time frame and show. Well, it shows me the recent one. I think there's another way I could just zoom in on the exact area that I wanted to look at. Here we go. It took so long. So after the breakout here, then it started to go sideways and ranged a little bit. This here could be a range, you know, especially on a lower time frame than this. And you would just use your tool again. And you'll see the same thing. Price going up and down, or down and up, and you know. And that brought me to a point 2 is this point of control. In this case, it's in the middle. And here it acted as resistance in price. It didn't make it all the way up to the value area high on this smaller range. You know, so if you were in a long down here somewhere, and you know, you could even take a portion of your profit at the point of control, because there is a chance that it could reverse on the point of control. It's a high volume area, and that white line, I generally don't take trades from that white line. I won't enter a trade with volume profiles unless I'm at the value area low or value area high, or the price is deviated outside. But you'll see, you know, these reactions, and you know, in this case, it was resistance here and here, support here. So there's obviously a key level here. So there's extra confluence with this point of control. Watch for that. You'll see that often. You know, at key levels, you're going to have high volume, and you know, you'll see it. You can, like I said, you can turn it on here if you want to. And I think I just had mine set anyway. Yeah, so you see the volume here. And see how these bars are like bigger right there at the point of control. So watch the point of control, because something might happen at it. Sometimes you'll have price go above and come back out and hit it as support and then break out like this. Like this is what happened here. Because this area was revealed with this tool, and then that's exactly what happened. You know, price went above it and didn't make it to the value area high. It came back down. And it used it as support. And then that's when it broke out. And I saw that same thing happen with Bitcoin. When Bitcoin made its recent low in this market right now, our current market. So now you know there are small ranges, there are big ranges, you know, there are tiny ranges if you get down on the very low time frames. And that's why I wanted to look at something like Ethereum or Bitcoin. And you'll see this, you know, you've got your trend and you've got little ranges and then breakouts of the range. And you know, not everything's going to be perfect. It depends, you know, like how long it ranges. That's why it's better to use higher time frames if you can. But when you look at this, and I'm just kind of looking at this for the first time because I never trade ETH. Here's a good example. And you see price starting to go sideways around here. So I would just pull somewhere around here. It doesn't have to be perfect because it's going to measure the volume. And let's say you were in a trade here or a short or something, and then it did this. And then you noticed, oh, it's ranging like right around here. Like it's hanging out in the same area. And this range forms. It takes time for the range to form. I think there's a lot of people and bots trading based on volume and these volume profiles. So as price action unfolds, you know, when you're watching it live, you'll see the ranges forming, and it can be a little weird at first, but once you start seeing it go back and forth between a certain area and say like around here somewhere, you could have figured out by using the tool that there's a range forming, and then you'll start seeing this, you know, it went up, down, and then it went up, down, up again, down, didn't make it, up, down, up, down, and then it went down, but it fell, like it just broke down. So you want to start to use another tool like TDIX. That's what I would recommend. Now, learning how to use this is another story. I talk about that in my other videos, and Seth teaches you how to use it in all the tutorials and training material that you'll receive if you join EasyAlgo. So once you have this, you can help. It can help you know when there's going to be a real trend. And in this case, I would say, well, it keeps going from red to green money flow, and there's no real pattern here. It's just kind of choppy. Maybe on a lower time frame, these little moves would look like trends. Say like if the hourly was your bias and you got down to like 15 minute, 5 minute, 3 minute or something, yeah, you could do that. You would see something like this, and this is the pattern I'm talking about. I talk about this a lot. I'll just go over it really quick. But you see a lot of red money flow. It's trending down, and you know, in red money flow that's been red for a while, you're going to be looking for bearish shark fins right around the 50 line. When it hits that Bollinger Band around there, you're going to be probably getting a high win rate. If you take shorts off of these in deep red money flow after a breakdown from a range, and same if it broke up. I'll just show that really quick, even though that wasn't the point of this particular video. You'll start to see, in this case it had a divergence before, but here's how you would know it was breaking out too. See, like it came back up to this high of the range, but the money flow was very high, and then it had a bullish shark fin in that thick red money flow. I'm sorry, thick green money flow. And so it's going to continue trending. That when you have thick green money flow like this and it's not coming down like humps like this all the time. I mean, this kind of went slow. It was kind of like a little trend here. But when you start to see that, it's less likely to reverse immediately. It's this money flow, these colors, the green and the red, it helps you see the trend. So I would have, you know, been looking for things like this. But more so, like I would have waited till here or something, which would have been kind of late. But anyway, that's another video talking about TDIX. You want to use something. You're going to need something to help you to know when to get in and out. You need, you know, an RSI or TDIX or some other type of confluence. Otherwise, it's just going to go up and down, and you don't know when. I'll look at it again and show you. You know, you're going to start to see things like this. Like, say it came back down, and deviated outside of this. It looked like it was going to break out of the range, but it started coming back up. And, you know, if you look at this, I would say as the money flows coming up, but this had a bull div on the money flow where the money flow was coming up, but the price was coming down. And what that means, it shows here that the red money flow is probably about to turn green, and it started to turn green. And then sometimes you get this here. Well, I'll show you the difference real quick if you're using TDIX and what you can do. So you can tell, you know, you've had a kind of like a downtrend here, but you had a bullish divergence on the money flow, and I'll leave that here so you understand. It's pretty basic. I make other videos on this. And so with the price coming down and the money flow coming up, even the RSI was coming up higher than here. You know, there's a good chance this money flow is going to switch from red to green, and then you're going to start getting bullish shark fins while in green money flow, which tend to be good entries after a crossover, not necessarily shark fin. But here, you know, you might be thinking, well, it looks like it's rejecting off of the value area low, like it's going to break down. Well, you had a divergence to kind of help you with that. Some other higher time frames may show you more data, and lower ones as well. But in this case, where it looks like it's going to break down and not come back in, you had bullish divergence, and then after the regular bullish divergence started to prepare to play out, then a hidden bull div, even on the money flow, occurred. And so this is a hidden bull div on the money flow. You had a big, deep shark fin, even on the RSI. You know, look at that. So that's what a tool can do to help you with knowing if price is going to get back into the range. So you had a regular one showing a reversal, and then it started to go up. And even though it came down, you had a hidden bull div to show continuation to go up. So I see these stacked divergences all the time on the money flow and on the RSI. And, you know, as soon as it got back in here, after that, especially after this continuation divergence, you know, you'd be looking for a long around here somewhere. And right there, like this is a nice looking shark fin, and then this crossover here, that would have been a good entry. So that can help you. You don't want to just use the fixed range volume profile alone. You need something like TDIX or some RSI or something to go with it to kind of help you find your more precise entry. So remember, you can use this on different time frames, and its price is fractal, so a little range here really isn't much on this time frame, but like on a lower time frame, there might be something going on here, and the fixed range volume profile tool might help you with that and knowing when it's going to break up or down. Of course, if you're using TDIX. So yeah, that's pretty much it on how to do this. And it takes time, like, to start to see, you know, where these little ranges start on different time frames. And, you know, here's a range, and then it broke down and then up. But I'm going to show you some other stuff a little bit before I end this. Because this is based on volume, the price action can't hide, and it'll help reveal key levels. So let's look at this one. This one's really interesting because the volume areas, the ranges, the volume ranges tend to be good for, I would say, forever, for as long as that asset exists. So once you've had a range in a certain area and price comes back to that range, it will react to it. So like you had a range here, and this is how I was able to tell at one point that Bitcoin was going to reverse, because I had a fixed range volume profile, and then I seen the volume area high and low. Bitcoin came back down to it. So this is the fascinating thing here. If I took a line and I extended that to, that would have been red, because that would have been a previous volume area high. And look at this, when price went way up, it broke out, came back down and tapped it, and then it came up. Pretty nice move right here. And you'll often see that, like this one had a reaction too, like there's a wick right here. If you would have extended this line, and I do this often, and see like there's a wick right there, it didn't hold. But the thing is that the volume is high in those areas, and price will react to it. Look at, I didn't even know this one now. Look at this. So you see what I'm saying? Once you put these on here, you can draw your lines, and you can start to see support, resistance, flip levels, or key levels that are just going to pop out. Because volume, you can't hide the volume, and a lot of people trade volume because of that. And in this case, it broke out of this range, and it trended, and it came back down. It tried to bounce on the high, but it couldn't. Well, it did bounce, but it didn't hold. And then it fell through and went straight through the whole range and came back down, and then bearishly retest. As a matter of fact, this is live here at this point on Ethereum. So this is showing it's looking for lower prices. When price breaks out of a range, it's probably going to put in a new swing high if it breaks up, and a new swing low if it breaks down from this action over here. So when you start to see this, it is very good to help you with key levels if you don't like plotting them yourself, and you'll see reactions to these levels. And I did this with Bitcoin. Not to get into this too much, but there's a range right over here. This is technically a range that Bitcoin had and broke out of. I had this labeled. I don't know if it's on my layers or whatever, but look at this. This is so perfect. Like when Bitcoin was here, and when you measure it, you'll see, let's say from here to here, Bitcoin was going up and down in this area for 238 days. This is a weekly chart here. So these volume levels are very strong, and this is how I knew when I seen this wick tap this green line, this value area low. So if I had this drawn on here as a key level previously, and that's how I believed that this breakout that occurred after this, because look at that reaction. Bitcoin came down and it got back into this volume range. Let me get rid of this thing. But this was a range that lasted for 238 days. And then, that was the volume area low here. And look at when price came back down, it tapped it. And I saw that. And when after Bitcoin had that dump, and I noticed the hidden bull did whatever. But because when Bitcoin, when it went down and tapped the volume area low of a previous range, and then it got above it, when it got, so like this was the range here, it went down and came right back up. When it got above this green, I'm sorry, that should be a red line. this red line, which was a previous volume area high, when it got above that and it broke out of this downtrend, I was in the chat room, on Discord, and I was like, that's it. The bear market's over. We're going to new all-time highs, because I saw this and I was like, it didn't want to hold in this range, and now it's in that range again. It got out, but it fell back down into it. So we're in this range, and right now there's a high likelihood that Bitcoin's going to 60K, because that's where the volume's at. And for as bad as this looks, and I was wrong, I admit I was wrong. I thought the bear market was over, because of also in part because of some of the fundamental stuff going on with the U.S. government and the Senate trying to push the Clarity Act and the crypto market structure bill, which happened right around here where there was a lot of news traction with it. I was feeling pretty bullish around here, but apparently it was a lower high and it was a dead cat bounce. But I'm going to show you something. I'm still bullish on Bitcoin. I always will be, even though I didn't plan to talk about that in this video. Even though Bitcoin has fallen back into this volume range, if it gets down here, there's going to be some confluence with this downtrend line. It may be coming to double test this downtrend line. It may be, but I'll show you something really cool. Once again, you had, in this case, a continuation divergence on a weekly time frame. On the RSI showing a continuation divergence, but it didn't fully go. I was expecting it to go up here at least. But even though it's coming down, I'm not really that worried about it. Because even though the price is starting to reach these lows, it's putting in another bull div, a reversal bull div on a weekly time frame, depending on if it can invalidate it or not. Because look at how high that RSI is. It's actually a RSI divergence, not a money flow divergence. But look at the RSI on the weekly is so high. It was so low. When it gets that low, it usually only does that on these high time frames, during the bottom. So that's why I was so bullish when it got into bullish sentiment here, right here. But look, it's retesting this. Look, this fast MA is still above the middle band of the money flow. And price would have to come, the RSI would have to come pretty far down to invalidate this. And it's not really a bull div right now, but it's forming another bull div. And like I showed you before, the stack, and other part of this video, the stacked divergences, whether you got a regular one and then a hidden, or a hidden and a regular, when you see the stacked divergence one after another, a move's coming. And that's for sure, unless it invalidates. So in this case, if this price comes down below these opposing levels right here, this bottom here, if Bitcoin comes down below 65,700, all it's going to do is form a bull div. That's what it's going to do. Unless this RSI comes way down here. So you would need to break this line with the RSI. Because see, the RSI will be higher, and the price will be lower, and that will be another bull div. So if it goes down there, but it could retap, it could retap this. It could come down here, it could come down to here and still be a bull div. So it could retap this volume area low here, that would be, you know, another retest of the trend line. There's a lot of confluence right here. And it's going to be hard to invalidate this bull div on the weekly right here. So even though it's coming down a little lower than I thought it would, because I felt, you know, I had my bull glasses on, I'm not worried about it because it's still forming a divergence. That RSI is high now. It's not like it was. It rejected the 50. That's bearish right here when this RSI does it. Anyway, I don't want to get off track, but you see what I'm doing here? I'm using a fixed range volume profile tool to get these levels, and Bitcoin and other tokens will react to them. And it's very easy to take trades, you know, small trades, sometimes big trades. You can take them on there and then use your TDIX to help you to find, you know, is it reversing? Is there a shark fin? Is this fast MA, the RSI crossing here? That's important. It might cross down here. Okay, so when you see things like that in combination with the key levels that you find through volume or your trend X, which I love, because it looks like there's confluence with trend X right there. Excuse me. Looks like a monthly support 2 level there. Look at all the confluence. You know, even if price came way down here, you've got a really good chance it's going to bounce. And I admit I was wrong to just say the bear market was over immediately, because like it looks like it's going to put in just a little bit of a lower low. But I think it's building, possibly going to build another a double bottom here, or maybe range a little bit again in this previous volume range. So it's worth watching. With that being said, you know, watching 70K and 60K. Now that Bitcoin is in that range between 60 and 70, 69 or whatever. So yeah, that's how you do it. I know my charts are messy. This is a little confusing, but if you've been watching my videos, you kind of understand what I'm saying here. That's how you can do it, and it'll help you. Hopefully that helped anybody. And yeah, don't be afraid to use this tool. You know, just, you know, use your EasyAlgo tools. Use your indicators from EasyAlgo. They are excellent. I will always love EasyAlgo and stay a member of the group unless they kick me out, which I doubt they're going to do. But because I do my best to obey the rules and everything, and they made me a mentor. But EasyAlgo is great. But think of it, you know, your fixed range volume profile is not a paid indicator. It's a tool. It's a paid tool, you know, with your trading view. So you can use it as confluence to complement, you know, your TDIX and other things. And you see it's a very good way to trade volume. So if you have questions, let me know, and have a great day.